If you are a lower time frame lover, or you're looking for a way to scalp the market consistently on a daily basis, quick in and out to make some quick bucks for yourself, stick around and watch this video to the end because I have amazing and exciting content for you guys today. Rick FX here, welcome back to my YouTube channel. If you are new here, kindly support the channel by clicking on the subscribe button. Also turn on post notifications, like and share this video. It helps the channel to grow as we are approaching the 5,000 subscribers hallmark. So in the past week that just ended, I actually used this strategy to find some amazing setups on gold and GBPUSD. I'm going to be leaving the screenshot somewhere around on the screen. So without wasting much time, let's get to the chopping board and dissect and break this chart down into pieces as we always do on this channel. Right, so for the purpose of this example, I'm going to be using XAUUSD, which is gold, and then GBPUSD, right? So there's going to be a series of procedures that I want you to follow when it comes to using this strategy. First things first, as market structure allows, it works very well in trending markets. So what you want to do is to go on a higher time frame, like the 4-hour time frame, do your analysis on the 4-hour time frame, predict the direction, and then trade that direction on the daily basis depending on how structure is formed on that particular day. So don't worry, don't confuse yourself. I'm going to take my time and show you exactly how you're going to do it. So for XAUUSD or gold, as you have it on my screen, this is the level, or this is the area we're going to be looking at. So somewhere around 27th or 28th, which was like just 2 days after Christmas in December, gold started making a nice move from this previous high right here. It was already an existing zone for a potential sell. So gold gave the confirmation for a sell. So if you are in a sell from the 4-hour time frame, ideally these areas are going to be your target areas for potential take profit zone. So it's either the market rallies all the way down to this level, or surpasses it to this level, or finally makes its way toward this lows right here. So it's either the market finds its way there, or goes back up, or it finds its way already here and goes back up, or you never know, break this level and continue going all the way down. So our job here as traders is to simply determine the direction of the higher time frame, and now scaling on the 15 minutes time frame or the lower time frame to catch these moves on a daily basis in direction of the trend. It is as simple as that. You know, gold can be very volatile, so trading it on the higher time frame usually gives us high stop loss. So you want to just go on a lower time frame and find some quick entries. Mind you, this is a day trading strategy, so we are looking to catch some quick moves in and out of the market. So after establishing the trade idea on the 4-hour time frame, so this is the same as somebody taking a sell trade from here on the 4-hour time frame, putting a stop loss above the range and then targeting these areas for their take profit. It's the same thing, but you here on the other hand want to come in on a daily basis to take the trade. So this right here, or this area, is going to be our region for the case study, right? So after doing this, what do? You go on the 15 minutes time frame, and then you see how structure plays out. Now after coming on the 15 minutes time frame, the next thing you want to do is to go to settings and then go to event and then add your session breaks. So your session breaks divides the chart for you on the daily basis. It shows you how the market behaves on the daily basis. Mind you, we already have a bias, which is a sell bias. So we are looking to sell the market on a daily basis. Some days the market is going to pull back, which means it's going to buy, but that will not really be our move because on the higher time frame is pointing to a sell. So we want to look out for what more sells. Now you also need to understand that trading is a game of probabilities, and you're not going to see your setup every day, but provided the market presents that opportunity for you for that particular day, you strike with your risk management and then you are out. If it doesn't, then you wait for the next day. So obviously this was the first day, so we'll say you want to skip this day because this was like the 4-hour confirmation, and then gold sold. No problem, gold sold. Now this right here is the beginning of what? The next day. Now look at what happened here. Look at this beautiful thing that's just happened here. So now when the market opens for the next day and it starts to pull back up, ideally we are looking to sell. So when the market even starts pulling back up, it means that day is going to be a good day, because eventually we are looking to see the market break out to the downside. So what do you want to do? You want to now observe structure. When I say observe structure, the same way you map out structure on the higher time frame with the higher highs and higher lows, or the lower lows and lower highs to determine an uptrend or a downtrend respectively, you will do the same thing on the lower time frame as well, marking your higher highs and the higher lows. So you can clearly tell that this market on a 15 minutes time frame is pulling back, creating a series of what? Higher highs and higher lows. You can support this with a small trend line right here, and at the same time you realize that this trend line, after drawing this trend line, it gives you a chart pattern, or it puts the market in a channel that when you extend gives you that nice rising wedge formation. And if you watch my previous videos on chart patterns, you clearly know that when you see a rising wedge, you are most likely to sell. So all of these indicators for that day is telling you that gold is going to continue the move that it was making. So your job here as a trader is to now just wait for this particular trade to break out of the rising wedge, and you take your position, and then you make your money for the rest of the day. So now you have to approach the market on a daily basis and see what the market gives you. The market does not necessarily have to give you a rising wedge on a daily basis. Today's pattern was a rising wedge, and that's how you trade it, straightforward. So you wait for the breakout, which is right here. Take a trade here. Put your stop loss somewhere above the range. This is gold, is highly volatile, so you want to be careful with your stop loss as well. Then you target these areas right here for your take profits. These lows right here of the wedge, this low of the wedge for the take profits. This right here, and you are done for the day. Mind you, it's the day trading strategy. You don't want to stress yourself on the market too much, right? So right from here to here, we had a whooping 67 pips, which is almost 70 pips. If you put a one lot on this trade, there's about $700 cool cash for you already. So just like that, we are done with that day. We move on to the next day. So you realize that after you're done trading, whatever happens for the rest of the day, you do not care. Now the reason why I'm saying this is that you are going to move forward, and you're going to see that some days the market will look very tempting for you to get back in on the trade, but you have to be disciplined enough to respect the rules that once you are done catching your trade for that day, you are moving to the next day, right? So whatever happens here, you do not really care. Now you need to do what? Wait for the next day. The next day started right from here. So it is really a rinse and repeat. So when the next day started from here, you can realize that the market just kept going up again, creating that series of what? Higher highs and then higher lows, higher highs and higher lows. And once again, you are expecting that drop. So as far as you are concerned, you are not enticed by what? These buys. Once again, you can just support this with a little trend line right from here and above, and then you can just know that, okay, this is our last significant low. So once the market finds a way to break this structure, you can jump in on a quick sell. So right here, this level will be your entry. So when it comes to this strategy, you want to be active on the chart and observe the candlestick closures. Sometimes you're going to jump in on the momentum that the market is using, especially on this, for instance. If you do not find your entry somewhere around here, you probably want to get a late entry somewhere around here where this candle is dropping massively. So even if you get your entry here, you put your stop loss right above this range, right? You can just target these areas. Once again, the lows of the beginning of that particular day's trend is enough for a take profit, right? So you can see that clearly gold went further down. But from experience, if you are not strong psychologically, or if you're not disciplined enough to allow your trade to do these things, this movement right here will frustrate you, and then you can close your trade with low profits. Because if the market move from this point to this point, which is about 80 pips, mind you, you pulled all the way back here, taking it back to what? 19 pips. So it is at this point that psychologically you feel like you are going to lose the trade, you're going to lose your money. So sometimes you might even end up closing your trade somewhere around here, and then you see that subsequently the market will find its way all the way back down. That is why it is important to define your clear exit point, which is the very first one, and then with just this, you've made your cool 80 pips with almost no risk, taking advantage of the very first push of the day, and then you are gone, or you are out of the market. So now gold finds its way all the way here, that's this thing, and then this right here is the beginning of what? The next day. So you come to realize that all of this we are doing in correlation with what? The higher time frame, the higher time frame bias, which is what? The sell, right? So you can clearly tell what's going on here already based on the what analysis that I've given for the previous two examples. So the market open right here, as usual, gold starts pushing all the way up. What do? You map out your higher highs and higher lows and identify structure on that lower time frame. So at the point, this was the lowest point that gold got to, went all the way back up, failed to create that high, created a double top, which is a sign for the change in trend. It came all the way back down, respected its lows, went back up again. So at this point, you should be preparing your missile, because you can clearly tell that, okay, this structure here, gold is finding it difficult to create new highs, and then we could potentially see the massive sell coming in, and then that massive sell will be confirmed when this lows right here is taken out. So that will mean your entry will be somewhere around in this particular candle right here. So you take your entry right here for that day, which is a sell position right here, put your stop loss above the range, right? And then where do you target? You target these lows right here. Realistically, don't be deceived by the pump, right? Yes, some days you can get this pump or this massive move, and then you can make some extra money. But what about days when this massive move doesn't happen and then the market gets choppy? So mind you, the rules are the rules, and then ideally this is the level where you would have set for your take profit, unless of course maybe you took some partials and then have some few positions running, then you can take advantage of what these extra gains. Other than that, you would have made a cool 57 pips, which is almost 60 pips on this trade setup alone, right? So just like that, we are done with this day as well. What do? We wait for the next day. So it's pretty much a rinse and repeat, right? Some days are going to be nice and smooth, some days are going to be rough, but at the end of the day, the skill remains paramount, right? So you look at this particular day, for instance, you see that gold opened and it started pushing all the way back up again, creating that same pattern of what series of higher highs, higher lows, higher highs, higher lows, double top, breakout, and trade entry right here. Short position, trade entry right here, stop loss around here, and then realistically, what will your take profit be? Your take profit will be here. So this right here is an example of a day where the market becomes choppy and messy. So you realize that this is where you'll be safe. You come to realize that it is not all the days that you see the market traveling very far. Nonetheless, you realize that this trade just found its way all the way back up. If you follow your trade management plan, you should be able to make some profits of this particular setup. Nonetheless, you realize that the setup just found its way into the next day. It crawled into the next day. Doesn't really give us that smooth entry, doesn't really give us that smooth pattern that it did in the previous days. But nonetheless, the bias for the sell was still respected. So over here, realistically, if you're not experienced, you might not be able to get entries for that day, unless of course you are using other concepts. But if you are following what I'm teaching you today, it will be very difficult for you to get a trade idea right here. So different concept I'm talking about is either you use this level right here as a previous high, so when the market go here, then you look for a sell down, which is not what I'm teaching you today. So realistically, if you are following my approach for the day, these are the kind of setups you'll be getting. And then when the market is presenting such opportunities, which it does about 80% of the time, you should be able to bank on them. Also, this particular day was NFP, right? So the market did this thing. We see the whipsaw movement, we saw the massive sell-off, and then we saw the market rallying all the way up. So it is understandable that there was a little chaos here on that particular day. Other than that, this is how I would have traded gold for the past week, and I actually did get some amazing setups on this trade as well. So that is it for this particular. The next currency pair that I want to break down is GBPUSD, also giving us similar pattern, not really the best, but the trade idea is still there. So when we go to GBPUSD on a 4-hour time frame, you can clearly tell that ideally this is a normal resistance sell all the way to here. So this level, this right here to this level, is like the trade idea. So let's go on a lower time frame, 50 minutes, and see what it gives us on a daily basis, right? So let's say you missed out on the first day, right? You missed out on the first day, which was this massive sell off here. The next day, you can clearly tell that what the market started pulling all the way back up, giving you that nice what series of what higher highs and then higher lows. Just like I taught you, push all the way back up. We are not interested in these buys because we know that they are all retracements. What are we interested in? We are interested in the sell. So if you map this out clearly, you can clearly see that this was a rising wedge. So even if you don't get your entry somewhere around here, which is normal, you should be able to get your entry after it breaks this rising wedge here and short the market all the way back down to these levels. Right after the market got to this level, you saw the market started ranging, which is not part of our business, by the way. So once the market ranges and it goes into the next day, right, the next day, as you can see, we saw the pullback up, This looks a little bit different because the pullback kind of complements what happened the previous day, right? So instead of getting our usual higher highs, higher lows, which we did get but on a lower scale, right, you realize that it ended up just complementing this whole move right here, this whole consolidation move right here, creating that bigger chart pattern for a continuation for the next day as well. So with this as well, if you are experienced and you have that flexible eye, you can be able to catch this trade, because as I said, the bias has already been established on the 4-hour time frame that is going to be a sell. So your job is to look out for your entries for the sell for that particular day, depending on what structure gives you, right? So that's just it. Within 2 days, we saw the market move all the way from here to this level. So that will be like the end of this particular trade idea. Then we'll look out for the opposite direction as well. So there you have it, guys. This is my simple yet effective strategy that I use to trade the market on a daily basis to catch some quick ins and outs as well. If you like this kind of content, you know what to do. Kindly subscribe to this channel, like this video, and share it with your friends. It helps the channel to grow. Click on the link in my description to join the RigFX Telegram community, where I drop insane trade signals and also educational content like this. Click on the link in my description to create an account with my recommended broker Xness. Follow me on all social media platforms at RICK__FX, especially on Instagram and on Twitter. That'll be all for this video. I'll see you guys in the next one. Peace out.